at a 13% premium to its issue price of 765 rupees, and the stock in fact intraday hit a high of 899.5, so almost 900 rupees. At the current market price of 884, Indigo is valued at 31,800 crores, which makes it the largest domestic carrier, not just by market cap but by market share as well. Now the stock is expensive, no two ways about that. It's trading at almost 7 times FY16 EV to EBITDA, which compares to about 5.5 to 6 times for global low-cost carrier players like Southwest Airlines. The company, as we know, has raised 3,010 crores at a price of 765 rupees a share, and brokerages are quite positive on the stock. In fact, this morning Edelweiss has initiated a coverage with a buy. They have a target price of 981 rupees on the stock. They say that the company is best placed to expand its capacity at 18 to 20% compounded annual growth. And they say that the prudent strategy of a younger fleet of single configuration aircraft is what is really helping the company do much better than its peers. And a hyper capital efficiency and free cash flow generation is a big positive as well.
Well, with a market cap of 32,000 crore, Indigo is hardly a kid now. But while Indigo flies high, the other stocks like Jet Airways and SpiceJet are grounded, and both of them are down nearly 2 to 3%. Bookwala believes that the aviation sector is very attractive ahead of the Indigo IPO.
What makes me very excited about aviation is, and about Indigo in particular, that 85–88% capacity utilization. Air India's market share is shrinking every year. There are not many planes on order. Indigo is the lowest cost airline. Can you imagine, he invested 300 crores, he's taken away 3,500 crores as dividend. His return on capital is 300%.
All right, then let's run you through all the movers and shakers stocks. A quick recap then. We have UB Holdings, Idea Cellular, Indigo, Hindalco, Maxwell, as well as Jamna Auto. Okay, then now time for our earnings Pataka segment. This season, we have been covering all those companies that have stood out in terms of good, strong second quarter numbers. Our expert is with us, Head of Research. Varinder, give us, what do you have today?
Well, we mentioned about Jamna Auto in the morning, and just to let our viewers know that this is the largest manufacturer of tapered leaf and parabolic springs for commercial vehicles in India, and they are the third largest in the world. So, a big player in its own niche itself. The market cap is nearly 900 crores for this company, and Q2 numbers were just stunning. On a consolidated basis, net profit was up 380% at nearly 15.5 crores. Total income was up nearly 24%. EBITDA was up 134% for this company, and the margin expansion, look at it, from 6% to 11.3% for this company. Even the first half of this company has been very good. For the first half itself, the company has posted a profit of nearly 28.2 crores compared to 8.6 crores. That means that in FY15, where they did a profit of nearly 29 crores. So company have already achieved the entire profit what they did in FY15 in the first half of FY16 itself. So if you have to do a valuation matrix, the stock is trading around 15–16 times on FY16 basis. So even if they grow at 15 or 20% next year, the stock could be around 13–14 times, which is not a very expensive stock. It's a zero net debt company, and the important takeaway from the annual report was where the management is focusing on ROCE, and in FY15 the ROCE stood at 22% compared to 12% in FY14. So good set of numbers by the company, and the stock is up today.
Okay, Varinder, thanks so much for taking us through that. One word in the markets, we're at the low point of the day, and the Nifty's even slipped below that 78.50 mark. So the Nifty intraday will be up for you on your screen, and pull up charts like a TCS. TCS is under pressure. It's dipped into the red. Names like Vedanta and Sun Pharma too at the low point of the day. So keep your eye on what's happening with the frontline indices. But one stock which is on our radar is Piramal Enterprises. The company has acquired a baby care brand called Little. Kedar Rajadnyer, the CEO of the Consumer Products Division, joins us now. Hi Kedar, congratulations and a happy Diwali to you. In your release, you've indicated that the consideration paid is 73 crores and the revenue contribution will not be more than 100 crore. If you could just help us with this brand Little on board, what will be the addition to your revenues, and will we see more such acquisitions?
Hi, thank you, and happy Diwali to you and all the listeners. I think it's a very interesting acquisition for us. I think since 2010, when we exited the domestic formulations business, since then, our consumer product business is the only business which is consumer facing in India today in the pharma space. And we have a strong portfolio of brands. We currently have 6 brands in the top 100 brands of OTC in the market today. Brands like Saridon, Lactocalamine, Ipil, Polycrol, Caladril, which are all number 1 and number 2 in their own respective categories. We thought Little's would be one brand which would be an interesting addition to us because it has got an entire range of products in the baby care, and it fits in with our strategy of growing and becoming a significant player in the consumer product space. The brand today operates in 6 different categories and has an offering across the range of kids products and baby care products. And we see this as a very interesting space which allows us to grow significantly because baby care market is growing quite handsomely in India. And there is no national player today who caters to all the categories. So from a top-line perspective, I think this is a very interesting addition. We believe that this will add roughly around, in a year, roughly around 8 to 10% to our top line today. And we believe that this also provides significant upside in terms of growth opportunities for the brand.
All right, Kedar, thanks so much for joining in today, Kedar. But 8 to 10%, you're saying it'll give a bounce to your top line. From when exactly can we see this coming into your books?
So it should be from next quarter because
next quarter.
Currently, yeah. Sure.
All right, and also, what are the margins on this kind of a business, and compare it with your current margins?
So currently, most of the products in the FMCG space, this will be similar to the FMCG, and the margins would be roughly in the range of around 45 to 50% at a gross margin level. And at EBITDA levels, most of the FMCG companies are in the range of 18 to 20%. But having said that, at this 10%, as I mentioned, is from a consumer product space, may not be from a overall Piramal enterprise. From a Piramal enterprise, it will be quite small. I think the consumer product business is roughly around 8 to 10% of that, and it will be smaller than that.
Okay. Historically, Piramal Enterprises Consumer Products, division used to offer products to do with healthcare and, personal care. This little brand also has a lot of, say, fashion for, for kids as well. So does that mean you're diversifying and you would be expanding your market, and therefore we should expect more such acquisitions?
And in fact, not. I think most of the products that we have are in the well-being and healthcare segment.
Right.
Most of the products are in that space itself. We also have a brand called Jungle Magic, which caters to the kids segment, and which has product offerings for children in their age band of 5 to 10 odd years, 5 to 10, 11 years. Had an opportunity in the 0 to 4 age band, and Little's provided us that opportunity of actually having an entire portfolio of brands for the age band of 0 to 4. So in a sense, it actually helps us have a complete offering from 0 to, let's say, around 10 or 11. And we are looking at opportunities to help build a portfolio today and build and actually make it a strong portfolio. Today, we are 7th ranked among all OTC players in India. But our intention is to become a top 3 player by 2020, and I think this will play in making sure that we work towards that.
All right, Kedar, thanks so much for joining in. A very happy Diwali from all of us here at CNBC-TV18. All the best for the second half of the year. But time to slip into a short break. On the other side, we'll get chatting with another management. We'll get chatting with Mr. Soni, the Joint President of Finance as well as Corporate Relations of Sangam India. Stay tuned.
It's the season of prosperity, the season of new beginnings.
Year after year, when it comes to Muhurat trading, you choose to watch only CNBC-TV18.
As we bring you the biggest experts and the smartest investment advice.
We'll help you invest safely and smartly.
IRB Infrastructure Developers presents Muhurat Trading, co-presented by Murugappa, on the only channel that leads every Diwali and every year, CNBC-TV18.
Welcome back. Then, as we speak, the Nifty has moved to the low point of the day. Things not looking too good. We're down close to around 75 points as we speak. And in fact, the second bout of selling has come about. PNB, that stock was holding in the green just around 20 minutes back. That's moved into the red. And just take a look at Dr. Reddy's. Now, that's corrected a full 1,000 points just in the last 7 to around 8 trading sessions. Pull up Dr. Reddy's so you can pull up a wider time horizon as well. And you'll see all the way from around 4,300 to around 3,300. That stock has moved lower. But I think we're seeing selling on some heavyweights as well. Reliance Industries has come in for a bit of a profit booking, as well as SBI. Both of them, they're heavier weights on the Nifty, and they have moved to the low point of the day. Reliance Industries, you pull up a daily chart of it. SBI as well, a daily chart of both those two stocks. But let's get talking with the management then. We have Mr. Soni of Sangam India who joins us currently. Hi, sir. Thanks so much for joining in. Just look, your numbers look more or less stable. Wonder a couple of details. On the top line itself, there was a growth of around 8%. Can you help us out with what exactly were your denim realizations?
So basically, denim realization has been increased by 3 to 4% this year YOY basis. And we are able to increase the denim realization due to the exports. Correct. We are able to clock a good 1,200% growth in the denim exports. So our denim volume has been increased, and the realization of denim is also been increased.
So what is that number, sir? The realization number? Could you help us out with that? And also, what was your total contribution of exports?
Average realization of this particular quarter is around 120 rupees per meter.
Okay. And how much did your exports contribute to the top line? You said that it's ballooned up.
Export is close to, you can say, 27%.
Okay.
We had reached all-around growth in the exports. If you see our denim data, denim exports is been reached by 1,200%. Then our yarn exports has been reached by around 49%. 49% up has been taken in the yarn exports. And then in PV fabric, our exports has grown by around 18%.
Okay. Mr. Soni, coming to a non-earnings related question, if you see a shareholding pattern, the promoters have been steadily increasing their stake. So, for instance, in March 2011, it was only at 37% stake. And, as of September 2015, it's shot up to 47% stake. And every quarter, we've seen a bit of an increase. What's the promoter plan? Do they want to make it above 50%? What would be the target holding that they're, planning? And would they continue to stay within the creeping acquisition limit of 5%?
Yeah, basically in last 2-3 years, we increased our holding by close to 9.5%. And our intent is to increase up to 51% at the comfortable range. So we are seeing the opportunity. Whenever there is opportunity, then we'll be able to increase our holding further.
Okay. All right. We'll have to leave it at that. Thanks so much for joining in. But let's focus on the new kid on the block. That's Indigo. Interglobe Aviation has listed at a whopping 13% premium to its issue price of $765 per share. CNBC-TV18's Farah Bookwala caught up with Aditya Ghosh, the president and whole-time director of the company, and began by asking him about the IPO.
A quick question on your dividend policy, which has been, in the eye of a storm lately. But you mentioned a couple of times, that the dividend policy is here to stay, and you do believe in rewarding all investors and all stakeholders. However, specifically for the fiscal year of 2016, you've already paid interim dividend to your promoters, about 1,002 crore rupees that you have done. Does this, or can investors expect a dividend this year in this fiscal?
So that's, of course, up to the board finally. The 1,000 crores are off an estimated earnings of fiscal 16. So very, very early for me to kind of, comment on that specifically for this year. But yes, our ambition is to be a dividend-paying stock. Our ambition is to create returns for shareholders. And especially for an airline in India, I think our success would be if people feel good about staying invested with Indigo, and that is an airline in India for a long period of time.
Well, now that you're a listed entity, would you be bringing out your second quarter results anytime soon?
No, I believe there are some restrictions and some dates, etc. So I think the next time we'll be coming out is after the first 3 quarters are up. So I guess we'll have to wait for a few months.
Okay. Coming to the civil aviation or the draft civil aviation policy, specifically on the 520 rule, the government has introduced one option, which is the domestic flying credit system. And I wanted to understand what your sense is as far as this credit system goes. It is not a tested policy in India, But there are several people in the know, or several industry people, who say that perhaps it could be the start of a new regimen which could work very well. Are you in favor of a domestic flying credit system if it were to come about, or do you continue to stand by the statement that 520 needs to be 520 should continue to stay?
Actually, I don't think 520 needs to stay. What needs to happen is that all these various interconnected policies have to be either changed or kept at the same in the same breath. In the sense that if we are changing 520, then we should take away route dispersal guidelines and we should create a level playing field. But whatever I could see in the policy, it's really positive. Even the domestic flying credits, which is one of the options available in 520, is actually nothing but, if you think about it in principle, it's saying the same thing as the 520. Prove yourself in India, gain credits, and then we'll allow you to fly overseas, which is something we've always said.
But it's sort of legitimizing the process of allowing airlines to fly abroad. So since that document is open for public consultations, would you be in favor of the DFCs?
Actually, even in the past, we have officially written to the government that the DFCs is a good idea to explore. Then maybe the number of credits should be a little bit more, so that so that's a question of kind of the details. But I feel very good about the new policy. Now, the only thing I'd like to caution everybody, whether it's the press, the government, airlines like ourselves, look, this is once in a lifetime opportunity. Let's not rush through this thing. Let's take our time. Let's put something together which will be good for the airline industry over the next several years to come, several decades to come. So I'm very, very hopeful about it.
All right, then.